Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone out there for supporting the channel. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. For today's video, I thought I'd take a look at how I make money with options trading in response to a number of viewers on the channel wondering exactly how options trading works. There are a number of different ways in which you can make money by options trading. On the channel, I've been detailing a number of my options trades, typically covered calls or cash covered puts. I sell off contracts, I get a premium for that contract, and then I simply let the contract expire. Out of the 70 or 80 options trades I've done so far, only a handful have actually required me to either sell off a stock I have in the portfolio or buy a stock from another investor. Probably around 6 or 7 out of 70 or 80 contracts. So the majority of the contracts I enter into simply expire. I keep the options premium and nothing else happens. There are a few cases in which stocks in the portfolio I sell covered calls on and I have those shares called away. I have to sell off those shares. And other ones in which I do cash covered puts in which I am required to buy a stock from another investor. But those are very rare. So I make most of my money simply letting the contracts expire and I keep the options premium. For example, here, Portola, $40 put sell. This is going to expire tomorrow. On the bottom, you can see I got $75 for this particular trade in a premium, $40 put sell, $720. $75 was credited to the account. Tomorrow, I can simply let this expire. Again, hopefully Portola ends the day over $40. If it does, the contract simply expires. If Portola ends the day below $40, I'll most likely be required to buy shares from another investor. As you can see on the bottom there, it's $39.92 per share right now. So hopefully that does trend up above 40. If it does, the contract expires, nothing else happens, I keep that $75. But if I do need to buy shares from the other investor, the collateral I have on this particular trade will be used to buy shares of this particular stock from another investor. That's the whole point of doing these covered calls as well as cash covered puts. You have some risk in which the contract will require you to do something in your portfolio. But another way of making money, and one I have not highlighted much on the channel, is you can buy and sell these contracts just like stocks. So for example, I sold off a contract. Again, you can see in the middle here, position -1. That means I sold off the contract. I got $75, as you can see on the bottom here, as a cash premium to the portfolio. But now if I wanted to, I could buy this particular contract back for $43. That -1 would become a 0, and the amount I would make on the trade would be $32. So I got $75. I'm required to pay $43 back. The difference, $32, would be credited to the account. I can close out my position in this option, but you can't sell additional contracts. So I could buy this back, make the $32, and be assured that I will not have to buy this particular stock from another investor. That's another way in which you can make money on these contracts without having to wait until they expire. If we go through the contracts here, you can see there are a number of different expiration dates up on top. For example, this particular put sell, 7/27. As I continue to scroll over, for $10 put, 12/21. And this one here, $4, $12 call, 1/18/19. So this is saying, again, just to review what these contracts mean, that I would be required to sell forward from my portfolio to another investor's portfolio for $12 per share on or before 1/18/19 if the other investor so chooses me to do so. I have 54 contracts that I sold off. You can see the average cost there, $57.41 per share. Again, each contract is 100 shares, so $57.41 per contract. So I got a large premium for that. But you can see since I sold off those particular contracts, it's now worth 25 cents per contract. So I could buy all of those contracts back for $1,350. You can see in the middle there, total return, I would make $1,750 by simply selling off the contract and then buying it back for less. This is another way in which you can sell contracts and then buy them back and make money. So I don't necessarily have to wait until 1/18/19 for this contract to expire. I could buy this back and still make $1,750 for doing absolutely nothing on the portfolio. And I still will receive the dividend for 4 that is coming up this next week as well. So this is a very good strategy, in my opinion, for utilizing stocks you have in the portfolio that you're holding for the longer term. IRM, another example of this IRM $35 call. On this one, unfortunately, you can see the total return would be negative $96 because I sold these off for $110 each. Again, $1.10 per share, 100 shares per contract, $110 per contract. So I got a total in the portfolio of about $220 or so. You can see there are actually a number of different calls there. 35 call sell 1019 for 115 and a 35 call sell 1019 for 105. So the average up on top again is 110 per share, $110 per contract. If I bought those back now, it'd be $1.58 per share or $158 per contract. So I'd have to spend $316. I only got $220, so I'd lose $96 on the trade. So this one I would hold for the longer term. Really, all of these I hold for the longer term. But if I wanted to sell Ford, for example, for whatever reason, I could sell off the contract, buy it back for a cheaper price, and then sell the stock off as I normally could. When you do have a sell like this, negative 54 contracts, essentially 54 contracts times 100 shares, 5,400 shares are locked up. I can't sell those off in the portfolio. So if Ford started going down, I would have to buy these contracts back, and then I could sell off Ford. That's sort of the risk behind some of these contracts as well. But again, just wanted to quickly do a video here highlighting the fact that these contracts, options contracts, can be bought and sold just like stocks if you so choose. I do a lot of these by simply selling off contracts and waiting for them to expire. Again, only about 7 or 8 contracts out of 70 or 80 have actually required me to either sell off a stock in the portfolio or buy a stock from another investor. So I've had a lot of success so far, and a lot of the contracts I do are pretty aggressive as well. One viewer is mentioning that, for example, AT&T here, $32 call, 727, was a little bit too aggressive. But if you take a look at the portfolio here, I could buy this contract back and still make $290 and be assured that these contracts would not be called away if AT&T has a very good earnings report, as you can see on the bottom here, an earnings report on July 24th. So that's going to be before that particular contract expires. So if I wanted to, I could go ahead and buy those contracts back for less. But I think what I'll do is simply hold those and see what happens next week, hoping that AT&T does not get up over $32. So that is a portfolio. Just wanted to go through and detail some of the ways in which you can make money on options trading. You don't have to let the contract expire. You don't have to exercise the contract. You can go ahead and buy and sell those just like stocks. So again, this video was in response to a few viewers on the channel wondering how you can make money with options trading. Not to make the video too long, I'll kind of end it here. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. If you guys have questions on this video or other videos, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So yeah, not to make the video too long, I'll kind of end it here, and we'll see you guys next time.